We begin with a major development that has captured the attention of currency followers worldwide, a significant joint statement concerning the potential revaluation of the Iraqi Dinar, IQD. Esteemed commentators Frank 26, Jim George, and Delta, names that carry substantial weight within the community dedicated to following the IQD's trajectory, have aligned their recent observations. This convergence of messages from such influential figures is a rare occurrence, prompting many analysts to examine whether this could indeed be the most substantive indication yet of an impending financial shift. Their unity is being treated not as mere talk, but as a potential signal that a prolonged period of speculation may be giving way to concrete action. The financial world is watching to see what this unprecedented alignment might truly signify for the future of the Iraqi currency. The focus of their joint communication centers on reported progress stemming directly from Baghdad. The analysts have highlighted information suggesting that conversations regarding the exchange rate are moving from the realm of prolonged theoretical debate into a phase of activation and implementation. This perceived shift in dialogue is a critical point, suggesting that the necessary groundwork has been completed and the final mechanisms for a rate adjustment are being considered for execution. The transition from discussion to doing is the key takeaway, providing a narrative of forward momentum that has energized the entire community tracking this complex financial story. This signals a potential culmination of years of preparatory work and international consultation. A parallel development, providing further substance to this narrative, involves the Iraqi Gazette, the official publication for government records. Reports indicate that the Gazette is preparing to issue new financial directives that would formalize and enforce policy changes under Iraqi law. The significance of this lies in the nature of the Gazette itself. Any changes published there are official, permanent, and legally binding, moving them beyond the scope of rumors or political rhetoric. The anticipation surrounding this potential publication is immense, as it represents the legal solidification of any major monetary decision, providing a tangible, verifiable marker for the financial community to monitor. The community has been instructed to watch the Gazette, recognizing its role as the official seal on a historic financial proclamation. Adding to the layers of complexity are persistent, albeit subtle, whispers circulating within international banking circles. These rumors suggest that financial institutions in both U.S. and European markets have initiated live rate testing of the IQD on their internal bank screens. Historically, such technical preparations have often been observed immediately preceding major currency announcements. The convergence of these internal banking activities with the external signals from Baghdad presents a compelling picture of logistical readiness. It suggests that major financial players are not operating on mere speculation, but are preparing their systems for a potential operational change, treating the possibility as a tangible, executable event. The convergence of these distinct signals the unanimous analysts' view, the forward momentum in Baghdad's discussions, the potential Gazette publication, and the whispered banking readiness suggests more than just a collective feeling of optimism. It forms a tangible chain of events. This chain is interpreted as the necessary sequence of administrative, legal, and operational steps required to transition to a new currency reality. When multiple, independently verifiable points of activity all begin to align, it transforms the general expectation into a focused anticipation of imminent transformation. This is what many are calling the most compelling setup for a currency shift witnessed to date. Delving deeper into the commentary, Frank 26 specifically highlighted reports of early morning meetings in Iraq that reportedly confirmed the central bank's roadmap. The assertion made is that this roadmap is not only finalized, but is currently sitting in a state of readiness for activation. This detail paints a picture of a completed master plan, a sophisticated and complex set of procedures now awaiting the final executive order to begin. The readiness of the central bank is a crucial element of the story, as it speaks directly to the institutional capacity of Iraq to manage a major shift without internal procedural failures. Following this, Jim George contributed a perspective focused on the external audience, particularly Tier 4B investors. His analysis suggests that this group may be close to gaining unprecedented access once the official portals for exchange procedures are opened. In the narrative surrounding the IQD, Tier 4B generally refers to the public, individual holders of the currency. The mention of this group being on the verge of access creates a sense of imminent opportunity, directly addressing the collective anticipation of the largest segment of the following community. This statement frames the potential event as the long-awaited payoff for their journey of waiting and watching, Delta then concluded the joint message with a succinct, pointed reminder: watch the Gazette. This phrase reinforces the idea that all of the complex political, economic, and banking maneuvers ultimately require a single, official, and legally undeniable public announcement. The Gazette, as the government's publication of record, is positioned as the definitive source where the rumors transition into official, verifiable truth. By urging the community to focus on this singular, concrete point of reference, Delta provided a final, authoritative directive that crystallizes the focus of the entire community's attention onto a specific, upcoming administrative action. The profound significance of this update is magnified by the current underlying strength of the Iraqi economic landscape, which is described as being at its most robust in decades. A critical factor supporting any potential revaluation is the nation's foreign currency reserves, which are currently at record highs. This high level of liquidity provides the Central Bank of Iraq, CBI, with the financial muscle and stability necessary to support a stronger exchange rate without immediately risking instability or hyperinflation. This financial resilience directly addresses one of the key historical concerns raised by international financial bodies regarding the sustainability of such a monumental monetary policy move. Furthermore, the strength of the Iraqi dinar is visibly demonstrated by a growing trend in international trade contracts being denominated in the local currency rather than the traditional US dollar. This operational shift among trading partners is an important indicator showing a tangible, on-the-ground confidence in the IQD. This movement reduces Iraq's dependency on the US dollar's dominance in regional commerce and serves as a natural, market-driven mechanism for currency appreciation. It provides a real-world, non-speculative justification for a stronger rate, rooted in the fundamentals of international trade. External pressure from global institutions like the International Monetary Fund, IMF, and the World Bank also plays a role. These organizations have consistently urged Iraq to stabilize and modernize its exchange system. This pressure is not interpreted as a measure of control, but rather as a necessary step to safeguard the Iraqi economy and ensure its full, unhindered participation within the global trade system. Their involvement provides an international seal of oversight, suggesting that any forthcoming change would be aligned with global best practices for fiscal stability and accountability. These external pressures and financial fundamentals are aligning perfectly with internal timing markers. Specifically noted are the end of September's fiscal quarter reset, the scheduling of upcoming oil contract settlements, and the necessary synchronization with the economic calendars of Gulf states. This combination suggests a narrow window of strategic opportunity where a major change would make the most logical and efficient sense from a pure, logistical and financial accounting perspective. The convergence of these distinct cyclical deadlines adds to the growing sense that the event is now highly time-sensitive, beyond the intricate financial mechanics. The conversation extends to the deeper, symbolic motivation driving this movement. The potential revaluation is framed as more than just an adjustment of currency value. It is seen as a crucial step in restoring full financial sovereignty to Iraq. It represents the nation's reclaiming of its financial independence and is viewed as an act that offers dignity to a population that has endured prolonged economic hardship. This deeper meaning imbues the financial shift with significant geopolitical and social weight, transforming the narrative into one of national restoration and economic self-determination. For the community that has been following these events, the current moment represents a critical juncture where long-term anticipation intersects with tangible progress. The sustained belief and patience of observers are now seemingly being met with concrete developments. This merging of faith and factual readiness has led to a collective sense that a long-awaited dream may finally be on the cusp of transitioning into a verifiable reality. It is a moment where years of speculation feel like they are leading to a definitive conclusion. One of the most compelling indicators of the revaluation process nearing an operational stage is the concrete evidence of U.S. banking readiness. Reports indicate that major financial institutions, including Wells Fargo, Chase, and HSBC, have not just theorized about the change, but have been running live software simulations that recognize the new IQD rates. This shift from theoretical planning to active, operational stress testing is a powerful signal that the banking infrastructure required to process the potential change is already established and functioning. Further confirming the operational readiness are multiple reports suggesting that dedicated redemption centers across the country have moved from a training and mock run status into 12-hour standby rotations. This logistical shift means that staff are fully scheduled and present, with all security protocols in place awaiting the final authorization. This detail implies that the operational system is not waiting on additional physical preparation but is primed for an immediate start upon receiving the green light from higher authorities, indicating a very high level of systemic preparedness. The continued expectation of non-disclosure agreements, NDAs, for anyone accessing specific contract rates further supports the notion of a planned, tiered rollout. This protocol suggests that the process is designed to ensure the confidentiality and security of sensitive information, often associated with a controlled, high-stakes financial transition. The implementation of NDAs reinforces the seriousness of the proceedings and the meticulous planning behind the expected exchange procedures. On the logistical front, credible leaks have referenced the circulation of smaller Iraqi notes, lower denominations, which would be a fundamental necessity for the everyday economy to function effectively at a new, potentially higher exchange rate. This preparation of physical currency suggests an imminent move towards a fully functional, post-revaluation economy. Accompanying this, there are also whispers of temporary exchange limits possibly being imposed by U.S. exchanges to carefully manage liquidity during the earliest phases of activation, demonstrating a planned, cautious approach to the initial rollout. The authoritative tone adopted by certain insiders is a striking element of the current narrative. The direct statements asserting that redemption centers are now in execution mode rather than a training phase suggest a high degree of confidence and proximity to the event. This means staffing, security, and liquidity windows are all positioned for immediate deployment. For a community that has spent years listening to speculation, these assertions of concrete physical infrastructure readiness speak volumes, offering powerful evidence that the final operational stage is now in place. The broader conversation around the Iraqi dinar has consistently involved other currencies, notably the Vietnamese Dong VND and the Zimbabwe dollar ZWL. Analysts often mention these currencies in the same context as the IQD because they share common characteristics: a history of artificially suppressed values, substantial foreign reserve holdings, and economies striving for financial independence from foreign monetary system dominance. This shared profile leads to the belief that the IQD's move could trigger a chain reaction. Market watchers widely believe that when the Iraqi dinar makes a significant rate move, it is highly probable that other similar currencies, like the Vietnamese Dong, will undergo a revaluation in rapid succession. This expected sequence is seen as a measure to proactively prevent arbitrage loopholes, which could be exploited by traders to take advantage of misaligned rates between interdependent markets. This anticipated domino effect underscores the global financial implications of an Iraqi dinar revaluation, suggesting it would not be an isolated event but a catalyst for broader change. Further, adding to the picture of coordinated preparation, are reports of unusual liquidity spikes on Asian and Middle Eastern stock exchanges in recent weeks. These anomalies are interpreted as sovereign wealth funds and regional banks positioning their portfolios for rapid transitions, suggesting an institutional awareness of impending currency shifts. Such market movements rarely occur without cause, and when linked with the mounting reports from Baghdad, they reinforce the idea that the current activity is not isolated but part of a coordinated regional and global financial preparation. The implications of a genuine revaluation are vast, as it would cause a ripple effect across global Forex markets. Such a fundamental shift would necessitate the recalibration of asset values, international trade contracts, and even sovereign debt agreements worldwide. Analysts suggest this would mark not only a significant shift in currency values, but a massive reset in global wealth distribution and financial sovereignty. For many investors and observers, the potential impact stretches far beyond personal profit, signifying a fundamental reshaping of global economic structures. Expert perspectives from various fields provide historical and quantitative context. A financial historian notes that modern Iraq has undergone 3 major currency resets, each occurring during moments of structural transformation. In every instance, the outcome was an ultimate boost in regional economic power, providing historical reassurance that resource-rich nations tend to emerge stronger after monetary restructuring. Supporting the long-term viability of the expected change, a seasoned banking insider added a crucial institutional detail, confirming that internal memos at major global banks like HSBC have explicitly categorized both the Iraqi dinar and Vietnamese Dong as strategic liquidity currencies. This terminology signals that these institutions are not merely observing the conversation, but are actively adjusting their internal systems and portfolios for potential integration at higher valuations, a clear move that demonstrates institutional confidence in the underlying potential. An oil economist offers a quantitative view, presenting models that demonstrate Iraq's ability to sustainably peg the dinar to its oil production capacity. The data suggests that if oil prices stabilize within a specific range, the dinar's value could be mathematically defensible at a substantially higher rate. This analysis moves the concept of revaluation from an aspiration into a mathematically supported possibility, grounding the speculation in hard economic principles. Related to national resources, a political risk advisor provides a necessary note of caution, emphasizing that the U.S. Treasury Department retains significant influence over the timing and conditions of any rollout. Factors such as regional stability, ongoing diplomatic negotiations, and geopolitical alignment with broader U.S. interests could either hasten or delay the process. This perspective highlights that the ultimate transition will be a complex fusion of history, institutional readiness, resource economics, and critical political decision-making. Commentators are now framing the September 30th fiscal year close as a flashing red marker on the timeline, a crucial point where long-term anticipation meets immediate operational preparation. While all fiscal closes are administrative, this one is being described as historically significant, marked by whispers of institutional systems undergoing stress tests and compliance mechanisms being positioned for instant use. The perception is that this date serves as the final administrative deadline before a new financial chapter can commence. Asterisk. Immediately following the fiscal close is the second critical signal, the anticipated publication of the Iraqi Gazette in early October. This typically mundane government record is now the focus of intense attention because its contents, if rumors are correct, will officially codify the financial measures prepared behind the scenes. This act would transform the document from a simple notice into a historic proclamation, legally binding the long-prepared changes. The timing, directly after the fiscal reset, is seen as strategically perfect for introducing systemic changes with precision and authority. The third and perhaps most emotionally charged signal is the persistent whisper of Tier 4B codes, being primed for activation within days. This phrase, circulating widely across various online forums and insider networks, injects a sense of immediate, palpable tension into the situation. Unlike the fixed date of the fiscal close or the estimated publishing window of the Gazette, within days is inherently elastic, suggesting a transformation that is not weeks away but potentially imminent, adding a sharp sense of urgency to the community's vigilance. The consensus among analysts is that the convergence of these three signals, banking readiness, international alignment, and analyst confirmation, creates the unmistakable tempo of a countdown. This is interpreted as a coordinated, orchestrated sequence of events that consistently precedes major financial shifts. This convergence is what separates general chatter from a structured sequence of indicators, reminding observers that this process is unfolding in real time and requires continuous, focused attention to avoid missing the final activation signal. Crucially, as a news channel reporting on these developments, a clear line of demarcation must be maintained. The information presented is not, and must not be construed as personal financial advice. The entire terrain is one of speculation, projection, and the interpretation of signals, which inherently carries both opportunities and risks. The responsibility for financial choices remains solely with the individual investor, who must exercise their own discernment and judgment, understanding that no commentator can guarantee an outcome in the complex and variable global markets. In moments of heightened expectation, there is often a surge of opportunism, with numerous entities offering guaranteed returns or special insider access, which are typically red flags for scams. Therefore, observers must resist the temptation to act impulsively based solely on unverified rumors. The historical guidance for successful navigation of turbulent waters is to remain grounded, deliberate, and protective of one's capital, prioritizing verified information over sensationalist claims. With that foundation of caution, practical guidance for investors focuses on documentation readiness. This involves meticulously reviewing identification records, verifying expiration dates on government-issued documents, and confirming compliance with Know Your Customer (KYC) requirements. Financial institutions involved in any potential shift will demand clarity and precision, and an individual's inability to meet these basic standards risks exclusion from opportunities that may materialize without significant advance notice. Furthermore, It is a wise step to proactively familiarize oneself with the eligibility requirements of participating banks. Rumors regarding which institutions will be designated for specific roles, such as hosting redemption centers, circulate freely, but official eligibility is never arbitrary. Investors are advised to seek verification from credible sources, rather than relying on unconfirmed word of mouth, ensuring their preparations are aligned with institutions that have confirmed credible roles in the potential process. The overall message remains one of strategic, focused preparation. Stay ready, stay calm, and stay informed. The work of preparation is not sensational, but it is absolutely decisive. When doors open, they often do so unexpectedly, favoring those who are prepared to move smoothly over those who are left scrambling. By maintaining an orderly approach, keeping meticulous records, and aligning with credible information, investors position themselves to respond effectively rather than reacting in a state of panic or confusion. As coverage of this complex story concludes, the updates provided by key analysts like Frank26, Jim George, and Delta are being treated not as mere passing commentary, but as orchestrated signals in a larger symphony of momentum. The collective narrative they amplify that a fundamental shift is imminent is now resonating because it is built upon a pattern of reinforcement, analysts speaking of windows, insiders whispering of coded activations, and official cycles converging on precise dates. This convergence of multiple, reinforcing signals is what elevates the current moment from ordinary rumor to credible resonance. The energy within the community is palpable, driven by the urgency of preparations and the heightened attention of those who have tracked this story for a long duration. Whether the shift manifests in days or a slightly longer window, the trajectory appears set, defined by an unmistakable momentum that favors those who have stayed vigilant. Finally, for all viewers who find value in this detailed breakdown, the invitation remains to actively engage with the community by subscribing and sharing this information. This collective engagement strengthens the network and amplifies the flow of credible, factual updates, thereby making it more difficult for misinformation or fear to gain traction. A strong, engaged collective ensures that when the official announcements are made, no individual has to navigate that moment in isolation. The ultimate promise of this platform is a commitment to a steady, reliable delivery of developments that matter most, prioritizing clarity over sensationalism. Between now and the next update, the core motivation remains the same: hold fast to patience, diligence, and readiness. For those are the qualities that allow a compelling opportunity to be effectively transformed into a tangible financial reality. The anticipation continues, but it is now one grounded in careful vigilance and a belief in the eventual culmination of a historic financial restructuring.